Hello and welcome to this video, how a home equity line of credit impacts credit score, what you need to know. In this video, we will be discussing everything you need to know about how a home equity line of credit can impact your credit score, and how to use it wisely to maintain a good credit standing. What is a home equity line of credit? A home equity line of credit or HELOC is a type of loan that allows you to borrow against the equity in your home. Equity is the difference between the current market value of your home and any outstanding mortgages or loans against it. With a home equity line of credit, you can access a line of credit up to a certain limit, and you only pay interest on the amount you actually use. Home equity line of credit draw period. It's important to understand the draw period of a home equity line of credit. The draw period is the time during which you can access funds from your line of credit. During this time, you can typically withdraw money as needed and only pay interest on the amount you've withdrawn. After the draw period, the repayment period begins and you will need to start paying back the principal as well as the interest. Make sure you understand the terms of your line of credit and how the draw and repayment periods work, so you can budget accordingly. Interest rate. Another important consideration with a HELOC is the interest rate. Home equity lines of credits typically have variable interest rates tied to indices such as the prime rate. This means that your interest rate may change over time, so be aware of the current rate and factor it into your budgeting plans. Before applying for a line of credit, shop around for the best interest rate and make sure you understand the terms and conditions. This can help you save money and ensure you're getting the best possible deal. How a home equity line of credit can impact your credit score. Your credit score is a number that represents your creditworthiness and is based on information from your credit report. Several factors can impact your credit score, including payment history, credit utilization rate, length of credit history, types of credit used, and recent credit inquiries. Taking out a line of credit can have both positive and negative impacts on your credit score. Let's take a closer look at these impacts. Positive impact. One way that can positively impact your credit score is by establishing a positive payment history. Making timely payments on your line of credit can demonstrate to lenders that you are a responsible borrower and can help to improve your credit score over time. Negative impact. On the other hand, a home equity line of credit can also have a negative impact on your credit score if you're not careful. For example, if you miss payments or make late payments, this can harm your credit score. Additionally, taking on too much debt on a line of credit can increase your credit utilization rate. Loan-to-value ratio or LTV. When it comes to a HELOC, another important factor to consider is the loan-to-value ratio. The LTV ratio is the loan amount divided by the property value. A high LTV ratio can indicate that you have a large amount of debt relative to the value of your property, which can be a red flag for lenders. To avoid a negative impact on your credit score, keep your LTV ratio low and make sure you're not borrowing more than you can afford to repay. Using a home equity line of credit for home improvement. One of the most popular uses for a HELOC is for home improvement projects. If you're thinking about using a home equity for this purpose, make sure to borrow only what you need and stick to a budget. This can help to reduce the impact on your credit score and keep you from owing more than you can afford to repay. Consider hiring a contractor who is familiar with line of credits and can assist you in getting the most out of your loan. They can also assist you in ensuring that the improvements you make to your home increase its value and help to offset the loan's cost. Consider refinancing to a fixed-rate loan. If you have a variable interest rate on your line of credit, consider refinancing to a fixed-rate loan. This can help to stabilize your payments and reduce the risk of interest rate increases that can impact your ability to make payments. Credit score monitoring. It's important to monitor your credit score regularly to see how your line of credit is impacting your credit standing. You can get a free credit report once a year from each of the 3 major credit bureaus: Equifax, Experian, and TransUnion. Consider using a credit monitoring service that provides regular updates on your credit score and alerts you to any changes. This can help you to identify any potential issues and take steps to address them before they have a significant impact on your credit score. Additionally, regularly reviewing your credit report can help you to identify and correct any errors or inaccuracies that may be affecting your credit score. Understanding your credit utilization rate. One of the most important factors influencing your credit score is your credit utilization rate. It is the amount of credit used in comparison to your credit limit. A high credit utilization rate can harm your credit score, so it's critical to keep it low. Ideally, your credit utilization rate should be less than 30%. This means that if you have a $10,000 credit limit, you should try to keep your balances under $3,000. If you have a high credit utilization rate, consider paying down your balances or requesting a credit limit increase to help lower your utilization rate. Avoid closing the line of credit prematurely. Closing a line of credit prematurely can have a negative impact on your credit score as it shortens your credit history. If you need to close the line of credit, try to do so after a few years to minimize the impact on your credit score. In conclusion, a HELOC can impact your credit score both positively and negatively, so it's important to understand how it works and how to use it wisely. By monitoring your credit score, understanding your credit utilization rate, and using a home equity line of credit responsibly, you can help to maintain a good credit standing and secure your financial future. Remember to hit the like button, share our video with your friends and family, and don't forget to subscribe to our channel to stay up to date on all of our latest content. Thanks for watching.